Such a long time. I've been waiting for a long time. And PayPal is officially over $80. How about that, folks? Wow. Estee Lauder EL stocks up over 10% here today. Winning Resorts is up over 8% here today. Some massive moves out there. We'll speak about why that's happening in this video here today. Tom Lee, everybody's favorite bull. Tom Lee went on CNBC actually last night, spoke about his views on where the market's headed from here, what's going to happen in October. Looking forward to hearing his thoughts and reacting to that one. David Tepper, legendary hedge fund, billionaire hedge fund investor over time. He's going to talk about why he's not buying the dip on NVIDIA here and also his views on the market in general. David Tepper, by the way, if you didn't know, arguably the worst owner of any NFL team out there. My gosh, the way he's destroyed the Carolina Panthers is it's just a tragedy. Absolutely. Billionaire investor David Tepper on China. Central bank comments exceed expectations. So looking forward to hearing his views on that, getting into that one. Calls of the day, some analyst calls here in the past hour on holdings in Tesla Maestro. We're looking forward to react to that one. Meta's chief product officer, Chris Cox, talks about those new AR glasses and how those could be a game changer. So looking forward to react to that one. Appreciate y'all being here as always. Thank you so much for being here. Thank you for being subscribed to the channel. 50,500 plus subscribers deep on the channel, new all-time high. Appreciate each and every one of you. Got a brand new workshop for you guys. I just made this about 2 weeks ago. Stocks to buy now for 2025. We got 3 trading days left in the quarter, and we're going to the fourth quarter. So you've got to think about how you position your portfolio now for 2025. I've already been making my moves. This workshop goes into how to position your portfolio, get yourself right for 2025. That's pinned comment down there, and you can send that over via email or text. So before we get into Tom Lee and start reacting to these videos, let's discuss EL Win. Like, why are these stocks moving so big? Right? 8% plus move, 10% plus move there. The reason those stocks are moving so massive is there's starting to become a view that China is going to get stronger. Now, I've had this view for a while. I'm sure if you watch my main channel and this channel, you know my view on China is it strengthens throughout 2025, slowly but surely, and starts to come back to life in 2026. And I'm no doomsday person on China forever and ever and ever, right? They stayed locked down for way too long, and they had to pay the price for that, right? And that's what's happened. But I do believe China starts to come back to life in 2025 and beyond. And so now the market's kind of catching up to that, right? With all the stimulus measures, China's obviously adopting here. And so there's a belief that, hey, you got to start to position into these sorts of stocks that have been beaten down, that are kind of China plays. In Estee Lauder, they get a substantial amount of their business from Asia in general, but specifically China. Winning Resorts has their, obviously, multiple 3 properties in Macau. They have the Wynn, they have the Encore, and they have the Wynn Palace, all in Macau, different parts of Macau. So they're heavily exposed to China. So if China strengthens, and by the way, the Macau numbers have been great. Like, regardless of all this, this goes to show you how much the stock market can just go based upon, like, opinions. Macau's been booming. Like, Macau's been booming. Like, look at all the numbers. They're booming over there. And so this isn't, like, this feeling about China strengthening is not something that's new. Like in terms of, like, Wynn's been doing great numbers in China. Their numbers are near all-time highs in regards to that, or getting very close. And so, just people go wild with this stuff, and they get way too bearish, and they get, all suddenly bullish. And it's like, have you not seen, like, the whale numbers are up even bigger? And guess who benefits probably more than anybody in Macau when it comes to whales? That is Wynn Resorts, right? That's why I call them Winning Resorts. So already in PayPal, very exciting that baby's crossing over 80. Continues to be a lot of momentum in PayPal. I mean, oh my gosh, is there a lot of momentum in PayPal now at this point in time? On a 5-day, this one's up about 5% or so. On a 3-month, PayPal is now up almost 37%. I mean, yeah, definitely a lot of momentum. And year to date, we're now up over 30% on PayPal. So congrats to all PayPal bulls out there.
Contributor live with us once again at Post 9. Nice to see you.
Great to see you, Scott.
Since the Fed did their jumbo cut, the market really hasn't done all that much except for one day last Thursday.
Why do they keep calling it a jumbo cut? Stop it with all that jumbo cut stuff. Man, 50 basis points, 75 basis points, then you call it a jumbo. 50? Come on.
Why?
Well, I think the Fed unleashed us on an easing cycle, and that's going to be positive. We know it's actually historically positive 3 months, 6 months out. But what stocks do in the next month is a bit of a coin flip, and I think that's what we're seeing because there's some repositioning that took place, And also we're now thinking about the 40 days into the election.
So does the fact that the election is but 40 days away sort of ruin the perfect scenario for stocks to get that post-Fed bump?
I think it delays it, just because,
Oh my gosh, I just saw something great. Oh, did I just see something great, folks? Look at this. So, very important here. Russell's having a good day. Dow's having a good day. Nasdaq's having a good day. S&P 500's having a good day. And commodities are going down. GSG is down. That's phenomenal. Like, that's best case scenario. Look at crude oil, 67. This is best case scenario. The stock market's going up. Commodities are going down, which means inflation's done and dead. Oh, man, that is absolutely beautiful.
It says that I've been speaking at and seeing wealth managers and family offices. A lot don't want to commit capital until after election day, and I don't think it matters who wins. It's just they want to get
exactly. That's such a mistake by so many people. They're premeditating this decision about, I didn't want to be in stocks, July, August, September, October, but after the election, that's when I'm going to buy. And it's like, okay, what happens if October is usually a bad month for the market? What happens if hypothetically October is a good month for the market as well? And suddenly you're buying S&P 500 at 5,900 or 6,000 or something like that, right? And you just missed out on this monumental amount of gains. And then what happens if after the election happens, like the market goes down? Like, you never know. Like, that, everybody's banking that, okay, it's good. Market's going to be horrible into the election. Then after the election, it's going to go up like a rocket ship. Like, what happens if it's the opposite? And this is something I've been talking about for a while on the channel. Like, what happens? Like, and this is why the time of the game, it's so silly. It's such a silly game that all these folks try to play. Oh yeah, the market's going to be bad. And everybody thought September was going to be bad. And gosh, I think September's been pretty good, has it not? Like I can't complain with my gains in September. That's for dang sure. I'm glad I was in the market in September. And now October, everybody's banking. Oh, market, please go down. October, please go down. Please go down. Please go down. What happens if it doesn't? What happens if we're up more? What happens if October's even stronger than September? No one's expecting that. What happens? Like, man.
Event behind them.
Oh, so you think we're going to have sort of a dash to the finish after Election Day is out of the way?
Yeah, and that's pretty typical. In fact, in election years, the November, December rallies are pretty tremendous. And in fact, when markets are up more than 10% in the first half, you also get big rallies November, December, sort of choppy through September.
You think investors are sold on the idea that this economy is going to make it? It's going to make it through. The Fed's going to pull this off. Is any of what we've witnessed since Fed Day doubts?
Before we get into the economy, the big mistake everybody's making is, let's call it what it is, okay? If you're a true investor, you do not care if the stock market goes down in September, October. It's going to go up in November. It's going to go up in December. You're not playing those games of in and out of the market. If you're an investor, you are. If what? You're a trader. If you're a trader, you care about all this. You're in the market, you're out of the market, you're in your portfolio, you're out of your portfolio. But here's the problem. These same individuals that are supposed to be traders are then making the cardinal sin of stock market trading. What is the cardinal sin of stock market trading? It's assuming certain things are going to play out and making premeditated moves that happen a month, 2 months from now. If you're a true trader in the market, you need to be trading what? The market that's in front of you, not the market that's a month from now or 2 months from now. If you're just making premeditated trading decisions in your head and like, I'm going to do this, what are you trading off of? You're not trading off technicals. You're not trading off fundamentals. You're not trading off anything. Seasonality? Who trades off seasonality? Come on, that's a little silly as far as that goes. Man, can that go south sometimes? So if you're not trading based upon data, fundamentals, technicals, you're gambling straight up. Like, trading's already pretty much gambling. But I mean, like, if we want to take it further, we can take it further. That's straight up gambling now at this point in time. Saying, I'm not going to own the market for these sort of months, but after this month, come on, man, that's straight up gambling. So, yeah. Silly. The
bigger picture.
So far, so good. This Friday, we get core PCE, and hopefully that confirms inflation is no longer on the front burner. But I'd say one thing I've noticed is that the number of investors and professional money managers that think we're already in a recession is very high. And so I think the evidence just has to be better than expected, and I think those views shift back to soft landing.
When we've seen recently targets for the S&P, Brian Belsky, I keep bringing him up because he's the most recent to raise his target up to the highest now on the street. I've asked you about, the market lately. You haven't sounded like you'd be raising your own target to a degree like that, would you?
I think there is a lot of upside in the foreseeable future. Let's say 3-6 months out. But for someone to tactically say we need to pin a 6,000 target and then put money to work today, I think it's harder to make that case because valuations aren't on the cheaper end, and we've already had a fairly sizable move. So I'm not saying I'm like bearish right now, but to me, I'd have a lot more confidence saying 3-6 months out, things are attractive, especially things like margin debt, right? It actually decreased in August, meaning investors have been deleveraging. It hasn't gone anywhere for the last 4 months at a time when markets are rising.
I guess my point would be it would have been better articulated to just say you don't sound as bullish as you usually are. Is that fair?
Yes, I'm bullish into year end, but I'm a little less confident about how markets behave into election day. And not that I think we're going to have a huge drawdown. If we do have a big drawdown, I'd be buying that dip. But I also don't think we can make new highs and then see the market blast off after election day. So I'd rather sort of say things look a lot better after election day.
Can we make new highs if tech doesn't resume its leadership?
Here's the issue, and here's why I really would love the market to be risk on in October, and I love us to blast this thing higher. I mean, part of me really wants the market lower because I can buy for a cheaper rate, but part of me secretly wants the market to go up a bunch in October, just because I would love to see all these individuals who have been on this sideline of like, oh, market's bad in September, market's bad and going to be bad in October, so we're going to buy after the election. And I would just love to see the market go risk on in October and just blast higher. And I'd love to see what all these individuals do. What do they all do if the market blasts higher in October after it already had a good September, and then are they still going to buy in November? That's my big question. Are they going to FOMO in at some point in October? Like, let's say the first 2 weeks of October, really good. No one's expecting that, right? Are they going to FOMO in it at that point? Like, oh my gosh, like I'm on the sideline. I got to get in this market. Like, what's going on? These stocks just keep going higher and higher and higher. I so want to see this. And so my secret hope, I hope the market goes up a bunch in October, because man, am I going to look forward to seeing what do all these people do that are all been betting, getting out of the market, banking on this.
In anywhere close to the degree that it had?
As long as tech is a market perform, if tech actually declines, that's going to be hard for the rest of the S&P 500 to compensate. But what we've seen so far, including the days like NVIDIA and Tesla recently, is that tech is actually holding its own, but other stocks are starting to show catalysts and signs of life.
Yeah. What about the broadening trade? I mean, you look at the Russell, your big call, of course. Week to date's down more than 1%. Really hasn't done much at all. I kept hearing, hey, you got to wait till the Fed cuts. Then you go into the Russell. I don't know. What do you think?
Well, Russell had a big week last week. It's some profit taking now. But I think that there's, this is what bottoms look like. I don't think bottoms are straight up. I know in 2021, energy was bottoming, and it was also very choppy, but eventually made not only new highs, but then basically had a blistering gain in 2020, in the year following. So I think that's a multi-year start for the Russell. It feels choppy, but we're still near all-time highs, and there's a big fundamental case to own small caps.
Some have made the case that there are a lot of areas of the market that are overcrowded at this point. So many different sectors have gone up a bunch. You look at industrials and utilities and other things that have traded near or at highs. Therefore, they find better value in bonds. What do you think?
I think a bond investor is buying a bond for a different reason than buying an equity. Because an equity gives you not only inflation protection and benefit from falling yields, but also capital appreciation and positive surprise. Bonds rarely give you positive surprise. I think a bond investor someone should have some income with some capital upside there, but there are so many good opportunities. And, the fact that China has started to actually perform better and potentially broken out that's again a breadth signal, because that's been a big drag for the last few years.
Oh, how about that? Do you feel like the move that happened in China this week's a game changer on how we should view what, the potential turn in their economy means for the overall markets? I mean, we've seen certain stocks get a nice boost, some of the luxury goods companies, right? LVMH, Estee Lauder, et cetera.
And the gaming stocks.
What about in the bigger picture?
It's hard to tell what's a trading rally versus a bottom for China. I spent some time talking to Mark Newton, our technical strategist. He thinks this is a bona fide breakout, and it is coming on the heels of not only stimulus, but in the face of unrelenting bad news for China. So to me, a rally on bad news is a sign that maybe the worst is already priced into China, and that means it could rally for a while.
All right.
Let's play a little game, because sometimes people want to know, what's the best way to play? Let's say you're bullish on China, right? What's the best way to play being bullish on China? Is it directly through, let's say, Chinese stocks, right? Like Alibaba, for instance, is the big dog, or is it through some other way? So there's a couple ways you can kind of look at this, right? If we look at a 5-day here, BABA's technically been the best way to play China if you're trying to play China direct, right? It's up on a 5-day, a little over 18% versus Este's up a little under 18% and wins up about 15%, right? And so if you want the most exposure, you can go with something like a BABA or maybe even a JD. Let's see how JD's done over the past few days here. Let's see JD. JD.com. JD is even to higher upside. So if let's say you're bullish on China, you want to play China, the most extreme is going to be something like a JD, right? From there, it's BABA, but you can also make a lot of money with American companies that do a lot of business in China, like an Estee Lauder, like Wynn Resorts. And then you're also not overexposed to just China, right? Because BABA's really a play on China, right? JD's really just a play on China. That's the way people kind of look at that, right? They might do some business outside of China, but let's be honest, those are just straight Chinese plays. Estee Lauder, huge business in China, but they also have a massive business in the United States. They also have massive business in Europe as well as outside of, in other parts of Asia as well. Wynn Resorts, sure, massive Chinese business, right? But they also have the 2 massive resorts here in Las Vegas. They have another resort they operate in Boston. And so it's not like it's just reliant on China. So sometimes you can get gains that you would be looking for by just buying a U.S. equity that's exposed to China, like a Wynn or an Estee Lauder or something like that, right? So just something to kind of keep in mind there. Next one up here, David Tepper, why he's not buying NVIDIA on the dip.
Well, we sold a lot of our NVIDIA.
Stuff before, yeah.
But, listen, the stock we thought was, too high at the time and would come down. Unfortunately, we didn't buy it when it came back down.
Right.
But, so it's okay. It's really... Those stocks like NVIDIA is a question. Do you have enough power, okay, for the growth? Do you have the next generation models that can take their chip? So it looks great in 24. It looks great in 25. I have no idea in 26 and 27.
Does he watch my channel? Is this not the point I've been making in regards to NVIDIA for months and months and months? I've been telling you guys literally for months now, NVIDIA's got it all wrapped up. 24, 25, numbers are there, man. And what I always tell you guys, 26, 27, you got to worry about that. That's where things become uncertain in regards to NVIDIA. That's hilarious.
Yeah. Okay, I mean, if I was good, I don't believe my analysts.
David Tepper, if you're watching this, sir, okay, listen. I appreciate what you do in the market, but still, what I said earlier about you and the Panthers, I can't take that back, man. I just got to be honest, you ruined that team. They were a very good team before. I don't know what you're doing over there, but you got to fix your stuff.
Any analyst, I don't trust myself. You know what I'm saying? I just don't know how you know. There's too much. And, you have these multiples out there and how...
Talking about Bryce Young?
And the variation of where that earnings can be on the out years is too much. So it's not my preferred vehicle versus other things that I have more confidence in how I can, how we can do in my shop, analysis on the earnings.
But you thought it was important to mention that you'll be playing the energy component of trying to supply all this new technology.
We're trying to understand it better.
But trying to understand it better
Here's the thing.
Would it be?
I'll tell you.
Would you avoid green? Would you embrace green? Would you avoid fossil fuels? Would you embrace fossil fuels, natural gas? Which way would you do it?
I never think I'm that smart, so I just like to use common sense.
I made you out to be really smart.
Okay, you can try, but I'm not going to accept it. But I do have a heck of a lot of common sense, and this is what I know. I talked to some governors, around the country, both sides of the aisle. I'm friendly with everybody, as you know.
Yeah.
They're not going to let their nuclear power come offline. It's not going to happen. It's a joke. Some of these projections on these things are crazy. It has to be, if you're going to meet these power needs of what they need for AI, you're going to have to use natural gas. You're going to have to use natural gas. It's just...
And that comes from drilling.
Yeah, I mean, we have a lot of it. And, so you have to use... you're going to have to use it. You cannot take if you take a current nuclear plant and you think you're going to get these things, it will never get by these individual, PUCs. It won't. It can't. It's going to hurt the consumer too much. You can't hurt the consumer that much. It's nuts. So I hear these guys talk about, well, if we did this, if I was 7'2", I would have been in the NBA one day. I'm not 7'2". Okay, if you want to say something that can't possibly happen,
you still wouldn't be in the NBA.
I would still. I don't have the skills. It's a true story, but
you could be 8'2".
So that's an interest when I say. So I'm trying to understand what really makes sense, what doesn't make sense,
right.
And we're trying to figure that out right now. So it's fascinating to me. It's fascinating when you look at these tech stocks. It's fascinating in a video, or you look at some of these things. Can you do for different reasons? There's different things as you go out years, different things that have to happen to make the growth projections happen. I'm not saying it won't happen. I'm just not smart enough to know if they will. I know the probabilities that they will or not, but I can't. No, I mean, it's what it is. Okay, so I recognize those things. And people are making assumptions that are going to happen 100%. Well, the United States is a great country, and we innovate like heck, and, things do happen this way, and usually you have flies in the
We do have a fly. We have a
It's
fly.
one particular one, and if I get him, I'm telling you, I'm not even going to kill him. I'm not going to kill him right away. I'm not going to kill him right away.
Dare I ask you how the election plays into all this?
So with the election, I am a big proponent of split government. And right now, as you're more than aware of,
Yep.
It looks like the Senate is Republican and the House is Democratic, and I'm loving life. And I don't care. I'm talking purely from this show. Okay, I don't care.
And what would you do if it was a sweep? If
it's a sweep on either side?
Democrat sweep.
So I'll just, and I don't want to talk about it that much politics, but I'll just say in general, you have a populist on one side and a progressive populist on the other. And if I listen to what happy day I hear more giveaways and more of that. So do I want all Democrats? No. Do I want all Republicans? No. I don't want more. Again, from a pure economics, there's other considerations,
right.
Which is just not the show to talk about. But from this market perspective, an economic perspective, what's good for the economy, I want a split government, and I don't want all Democrats, and I don't want all Republicans.
And you think at the moment...
If I'm thinking about the markets.
No, and you think at the moment it's not impacting the markets either way, because you think that the expectation is that it's going to be split.
Well, not only the expectation's there. People bet on it. The betting markets are that way, that it's split. And as long as it's split, and this may be a problem because the market thinks it's going to be split right now. So if it gets surprised, that could be a problem for the markets. But as long as it's a split, the market's going to be fine. They will not care because they're not going to let them do the things they talk about.
So, David, are you afraid to play AI directly? You're doing the sort of downstream ways of doing it. I mean, is it too hard to figure out? There's NVIDIA, but
no. Listen, you have
what besides NVIDIA and energy could?
Well, we have the regular stocks like a Meta has been a big beneficiary of AI.
Right. Llama.
All these. I mean, and they just in how they do models, how they monetize their business, and other.
Is that a
like
big
Amazon.
trend for you, or is there something else?
It's the question how much is in the stocks and how much the next generation is, how much more, because they've gotten pretty good returns, I think, more than people appreciate in one of these numbers, and so they could have near-term all these stocks could have near-term surprises. So the question is,
oh, did you guys hear about the new bear case on Meta? I'll tell you about the new bear case on Meta. The new bear case on Meta is, since they're going to push more and more into physical products, right, over the coming years, their margins could potentially go down. And so that's the new bear case on Meta is, yeah, even if they make a bunch of money from that and offset losses, their margins might go down. What do I look at? I say, all I care about is that the company makes more money. All I care about is the revenue goes higher and the net income goes higher. If the margins go down and the net income's going up and the revenue's going up, it's all fine with me. More money's more money. That's all I care about. But that's a new bear case around Meta. Oh, they sell a lot of these physical products and margins are going to go down.
As it goes further out.
When you say surprises on the upside or downside?
It is true.
Well, surprises on the upside if they can change the models, and some of the base earnings are good enough to give support for those stocks, versus, we talked about, and I kind of like NVIDIA, the price, okay, so don't get me wrong. I could just love it, okay? But you have to believe more in that. Versus
are you not a believer that long-term for AI to actually work and to be a meaningful contributor to the economy,
yes.
that NVIDIA's margins ultimately have to come down? Meaning, as long as they have, it was like 70% margin, 80% margins on some of these chips, it's amazing, and God bless them for it. But at some point, to make this whole thing economical, I imagine those margins are going to have to come down.
It depends how much they make, right? But look, there's another concern potentially.
Do you have any Lilly, Novo? You have any healthcare? You got any biotech?
Are you asking me if I
just trying to get as much as I can? Nope. I'm just saying. You watch Lilly. Lilly has been a growth stock.
No, I don't have.
So no healthcare.
Can I go back to China again? Just
which I think is the biggest thing that people really have to go and understand it, because it has implications all over in bonds, currencies, and stocks. We didn't talk about the currencies and bond side.
By the way, if you want to go lower tier China plays, okay, let's say you still want to get risk on exposure at China, but you want to go, let's call less risky, then certainly JD or Baba, because I would view JD and Baba as kind of like the most risky because they're just like direct. Then the next tier down for like still great reward potential, but it comes with risk, right? For China's risk is kind of like EL and Win. What's the next layer? There's two stocks specifically I would look at as kind of the next layer down in regards to China exposure. Okay, they are these two, Starbucks and guess what? Nike. Starbucks and Nike. Now those are kind of next tier down as far as level of risk, like China exposure and those sorts of things. Now if you want to go kind of something in between these and these, I have a company for you. You know what it is? It's it's this one right here. Good old Tesla Maisla. That's something I would put kind of right in between kind of an Estee, a Win, and a Nike and a Starbucks. And if we look at Tesla, it's up about almost 6% in the past 5 days, right? So, yeah, if you want to play China, there's just different ways to play China. If you think there's going to be a nice recovery there over the next few years, you can play direct. If you want to go JD, Baba. If you want to go less risky, you go EL, Win. Still great upside potential there over the coming years. If you want to go next one down, then you can go Tesla. And if you want to go least risky, but still some upside there, you can go like a Nike. You can go a Starbucks, something like that. Okay. All right, let's get into China.
Okay, if they go 50, they may go more. We think, mortgage rates in this country. We think business loans in this country we think interest on the net. You immediately thought China and currency differences around the world. So that was more important to you.
Because the undervaluation is, listen, you can look at your chart and look at a chart of Baba on your screen right there, whatever stock you like. In China, they are, even with the recent moves, they're like on a flat line low.
That's true.
Compared to where they have been in the past. And you're sitting there with single multiple PEs with double-digit growth rates for the big stocks that trade over here.
Yeah,
that's kind of versus what you're 20 plus on the S&P. Right. Okay, and then you have. So the question was China going to do the things that you want them to do? Okay, are they going to do the easing measures that you want them to do? So yeah, they came the other day, and what's his name, Pan Gongcheng, and I apologize because I can't even speak English well. He came out and he was like jovial. It's like, whoa, jovial, saying we're going to cut and we'll give you more. And he said we'll do more and more if needed. Now the Chinese to say, well,
that's what I sound like when I call up the Chinese restaurant. I tell them what I want to eat, and they're like, "Excuse me, what do you say?"
More and more if needed. They don't say that. because it's not been healthy to say those sort of things in China. But they said that the other night, and I've listened very carefully what government officials say. So I took it that they did a lot, they exceeded expectations, and they promised to do more and more and more, okay? And that's very strange language, especially for, any central banker, but especially over there. So that was the first thing that happened. And last night, we heard that they were going to have some kind of meeting, but they kind of blew away expectations on the physical stimulus, that they were going to do. Now, physical stimulus, if you look at your charts, if you like charts, because you used to be a broker, and that was a good way to do things fast, what can happen around the world when they do that? That's what you have to ask yourself now. So now you have the Fed. So just to backdrop again, the Fed's easing. You have a few more easings coming. The Japanese, they don't know what they want to do right now, but it doesn't matter what people think. They're going to be forced into things, and I can talk about that in a second. The Europeans are lowering rates. And now the Chinese are lowering rates, okay? And they're aggressive in how they're going to do it. And they're also, believe this or not, swap facilities to buy stocks. Encouraging buyback of stocks. Encouraging buybacks of stocks. Okay, this is China, all right? This is stock buybacks. Not only encouraging it, lending you money to do it. And they're giving money like TELF money where you can put money out and you have no losses. If you want to do it, you know how that thing works. You have only the money you put up, and you don't lose money. That's a great deal for me. I want to be over there and borrow for some of this stuff. So,
what about the relationship between the United States and China? How the Chinese government may or may not feel about American investors, but maybe more importantly, how the American government feels about U.S. investors investing in China too. What's the risk? How do you? That
would be a risk, and that's why you have limits on how much you would invest. However,
you just said you don't have
the other thing I thought you were going to ask is about tariffs and stuff like that. I do not care.
Yeah.
This is internal stimulus. In the fiscal stimulus they did last night, they're going to encourage consumption, directly saying it. So they're really doing all the things that people have asked them to do over these years. So what will happen on world markets? So now you want to talk with the United States. Most of your viewers are here in the United States.
Yeah, at the end of the day, China's got an incredible opportunity. Like I said, I feel like so many people want to always doomsday China, but China's got an incredible opportunity over this next 10, 20 years. What is that opportunity? It's the opportunity to move their economy much more to service-based economy. They have a massive economy now. They have a huge middle class in China. And so they really got to focus that economy really over the next 10, 20 years, much more on internal services, right? Kind of like the U.S., where, there's always people say a lot of funny things about the U.S. economy, but basically they just say we're all buying frappuccinos from each other, okay? That's what they say. And that's the U.S. economy, right? At the end of the day, China has got to this place because they were the manufacturer of the world. And they were the manufacturer of the world started really in the 1980s, and in my opinion, in a major way, and obviously led through until about 2020. And now, slowly, over the next 10, 20 years, their economy is going to be, in my opinion, less and less on being the manufacturer of the world. I believe India is actually going to become the manufacturer of the world, likely over the next 10, 20 years, if not 30 years, right? Now, China has this incredible opportunity to be much more insulated and much more reliant on itself and their people, rather than relying on how many goodies does the U.S. order from us, right? So that's where I think the Chinese economy is going over time, and I think that will bode very well for China over the next, many decades. Also, China's always been very reliant on commodities, natural resources, and getting those from other countries, right? And so money leaving the country to go to other countries. With obviously the solar technology getting to where it is, and never mind where it's going to be in the future, electrification of their vehicle fleets, I think China sets up in a pretty good situation for the next 10, 20 years where they're going to become much less reliant on fossil fuels over this next 10, 20 years than they certainly were over the last 10, 20 years. And that could bode very well for their economy as well. So rather than money going to the Saudis or whoever they're getting the oil from, right? Natural gas, all those sorts of things, they can become much more reliant on wind, solar. That's why they've been pushing so hard for this last, I would say, 5, 10 years, really into like EVs and those sorts of things. So I don't know, man. I'm actually optimistic on China, and I want China to win. I do. In terms of when I say I want China to win, I always want the U.S. to be number one, obviously, but I want China to be successful. If China is successful, there's much less chance, I could tell you, we're going to have a China-Taiwan situation. We're going to have, other problems. Let's just call it like that, right? If China's very successful in itself. Additionally, it means we can make a lot more money. Everybody can make a lot more money. We have so many big American corporations that sell into China. If Chinese economy is weak, it hurts their stock prices. It hurts the company revenues and profits, right? Steve Wynn, in regards to Wynn Resorts, he used to talk about how the Chinese market and what they were doing in Macau was really subsidizing the Las Vegas operations in all the employee force, because actually the Las Vegas operations, after the great financial crisis, wasn't really making the company money for many years, but it was being offset because Macau was so strong, right? And so there's a lot of jobs that are actually, there's a lot of jobs that are created inside the United States that really, it's because of China's, big business opportunity. If you're a business and you get 20% of your revenues from China, you're probably going to have a lot of corporate employees in the United States that are helping run that business over there, right? So this is just kind of, food for thought, as I like to say, and your thoughts are full of food.
Europe or Japan?
Europe or Japan.
You started on Japan.
Okay, so we can go around the world. Obviously, this is incredibly good for very undervalued Chinese equities, okay? Especially when the government's encouraging
the buybacks.
Buybacks, and for you to take risks to buy stock.
Right.
Take a loan out, buy stock, you can't lose money on your loan. Great deal for me. I would, if you want to be Chinese, is Sorkin a Chinese name? No, okay, sorry. Anyway, sorry. So you have, so the United States, so you have this world, and so I'm trying to figure the United States, so it's not really your first plug to invest right now, because you would say China first, Asia second, right? Asia at large second.
Okay.
Japan, Korea, those markets. Also, actually, Asia and Europe before Japan. And I will tell you why. The problem with, you have to be careful a little bit about Japan, although I think it's still you want to be in the equity markets. If you look what happens, if China runs and they get the economy going and you get the animal spirits going, what happens? Chinese throw a lot of money in their economy. Who's one of the biggest beneficiaries in their own economy? Is Japan. And Japan, if they start running faster, I don't care what this election is, and they're worried about this candidate and that candidate. Some candidates might want to go to Abenomics, and I don't care. They don't even understand it yet. This just happened last night. The market doesn't understand it yet. What's going to happen? Japan's going to run too fast if they really stimulate there. And when Japan runs too fast, they're going to have to raise rates. And when they raise rates, the yen's going to appreciate. And if the yen appreciates, then you have to be careful about the stock market, not the stock, depending how it goes. Now, the stock market in yen terms, you should still make money, but how much does it move or not because of how it historically does, right? So you go around the world. The U.S., listen, the problem with the U.S., and then I could go European. The European index at 14 times multiple versus a 22, historically incredibly wide.
22 here.
21, 22, whatever you want to say for
14,
next year.
So Europe looks good.
Yeah, it looks interesting.
We're like last in Europe.
Well, Japan has the same sort of multiple right now, and you can say we have much better stocks and much bigger tech stocks and that. So the question here, where you don't have necessarily a cheap market, right? It's not a cheap market. It probably is, and I didn't listen to him. I listened a little bit, but what Cooperman said yesterday. But if you looked at it historically, it's a little overvalued. Okay, I would say that. However, I get concerned about one thing, because fortunately or unfortunately, I was around in the 90s. I was around in the 80s too, but I was around in the 90s. And, in that market where the Fed, cut rates into Y2K, in a good economy, right. A relatively, not a bad economy, but a relatively okay economy, you had those rich in before long-term credit, rich in 97, relatively rich, richer after long-term credit, and bubble mania in 99, early 2000. Mm-hmm. So I don't love. I'm a value guy. I don't love the U.S. markets on a value standpoint, but I sure as heck won't be short.
Well,
because I would be nervous as heck about the setup, right, with easy money everywhere, a relatively good economy, and China just massive stimulus coming in. So it would make me nervous not to be somewhat long the U.S. Now, so that's how the setup is, so you can't be short the U.S. Right. You can't be short anything in Asia. Right. Anything Nothing. In Asia.
Yeah,
Nothing.
I agree with that. 100%. 100%, right? And, you know, I know U.S. market certainly looks rich compared to a lot of these international markets. But listen, here's the deal. Why would I want to own these international markets? Why? In China, there's so many trust issues around stocks over there. It's not even funny. I don't even want to go down that rabbit hole, okay? So, nah. Japan, no. Europe. Sure, Europe looks cheap compared to the U.S. What companies do I want to own in Europe? I'm just going to be honest, I don't. I don't want to own European corporations. I want to own American corporations. They are the best. They are the creme de la creme. They run their businesses the best. They have the best revenues. They have the best profitability. They're the creme de la creme. And so I don't want to play those. It's like saying, would I rather buy a house in, I don't know, Dayton, Ohio, or a house in Newport Beach? I mean, that's the way I look at it, right? Fayetteville, Arkansas, or Manhattan. Like, I think I'll go with the Manhattan one. Thank you very much. So that's the way I'll look at it. And, you know, we just got the best of the best over here. We got NVIDIA. We have Meta. We have Apple. We have Microsoft, right? We have Amazon. We have everything that really is running the world. And so that's where you got to be positioned. Google, McDougal, and then you can go a tier under that into the PayPals and all those sorts of companies and the Shopify's. Well, Shopify actually, not U.S. Some people consider it a U.S. corporation because so much of their business comes from the U.S., but it's actually not. But the moral of the story is, like, we got it all over here. And so you're willing to pay more. No different than you're willing to pay more for prime real estate in big cities. That's just the way it is.
Steve, it was at 47 from KeyBank. Reiterate overweight. Jimmy, tell me.
Yeah, I mean,
shout out Dayton, Ohio. Shout out Fayetteville, Arkansas.
Fun stock. I've owned this for about a month and a half. It's up 20% in that time frame. People who've held it longer are up a lot more. I think it continues. Now, somebody might say to me, Jimmy, how can you hold this when it's 40 times next year's earnings? Aren't you a value investor? At heart, I am, but I also note that this stock, this company is growing like a weed. Estimates are that it's going to grow 35% earnings per share over the next couple of years, and I believe it because there's a lot of geographies into which it can expand, and it's barely scratched the surface in terms of apparel. We all know about the running shoes, which everybody's gaga for, and they're just expanding the brand. There's a lot of room for them to do so. So I'm going to stick with it.
Who do you think he was channeling? You or me when he said?
It's risky. It's risky when you expand like that, and you're primarily a shoe company, right? It's risky, and the reason being is you have to spend a lot of capital to expand. You have to get inventory in the right place, right? Then you have to market like crazy, and if all of a sudden the sales numbers aren't quite there, next thing you know, you're sitting on big losses in certain markets. So it sounds good, but I can tell you for a lot of shoe companies, that expansion into either more physical retail or into other countries, sometimes it's actually their death.
What he was going to say, Jimmy,
it's the
what
world
are you
at
doing?
large, the world at large.
Don't be so paranoid.
Yeah, exactly. Exactly. Insecure. I mean, let's go. Okay.
What is it?
Proud.
2-on-1 tag team?
Proud.
Who am I tagging? I'm tagging Brenda.
Tesla.
You're in.
All right. Tesla.
Exactly.
Tesla.
You're in.
Stock's positive on the year, at least it was. You still hold the stock, correct?
We do.
What's your view?
So we have this event coming up October 10th where I think they're going to talk about robo-taxi. We are not as positive on robo-taxi opportunity. We think it's going to take a long time. If we look at Waymo, for example, it has taken years for Waymo just to have one city, San Francisco, which is happening successfully. But nevertheless, on October 10th, what we would love to hear about more is the lower priced vehicle. And I think there is some chance that we will hear a little something about lower priced vehicle, which we think could be a positive for the story here. But otherwise, we know this is a controversial stock, but we think the company is still well positioned. Lots of other competitors have stepped away from doing 100% EV, and we think that just creates an opportunity for Tesla to continue to gain.
The earnings are a week after the robo-taxi announcement. Mm-hmm. Okay. You think they'll use the robo-taxi announcement as a catalyst to say anything else, or that'll be very focused?
I'm hopeful that they'll talk a little bit more about the lower cost vehicle that we know is coming at some point. And so I think that would be a great opportunity. Some are saying, they should have a separate event for that. And I think they probably should. Yeah. But I think we'll hear probably a little something about it, which could be a positive.
All right.
I mean, my opinion is they're going to show it both off. I think they're both going to go together. So I don't know. We'll see. But that's kind of my opinion there. Ms. Chief Product Officer on the new AR glasses.
Borston, Julia. Morgan, thanks so much. Chris, thanks so much for being with us here today. You've been with Facebook since the very beginning, the very early days. And today we just saw the unveiling of the most futuristic technology Meta has ever unveiled. These new Orion augmented...
She just said that, and you know what I thought? I thought, that man's got to be crazy rich. Oh my gosh.
reality glasses. They're lightweight, but there's no date or price tag on them, no sense of when they'll launch. Why are you investing so much in this technology, and how will it eventually tie into your business?
Yeah, so today we announced a prototype of Orion. We wanted to show the demo to people, just to show what we've been working on. It's the most advanced pair of glasses ever made. It's lightweight. It's got a really powerful computing in it. You can see through it, so you can make eye contact, but they project a holographic display so that you can summon a screen, or you can look at your messages, you can watch video, you can have a video chat with somebody. We've been investing for this for a long time, just because we are asking the question, sort of what comes after the smartphone, and what happens in a world where you're not sort of constantly checking a phone in order to understand how to interact with other people or to check whatever it is you're looking at. So this is a major leap forward for technology. It's a big step forward for our sort of goal to help define the next generation of computing. And it was the most, I'd say, premium thing we showcased today.
Yeah, it was really fascinating to see. What I'm curious, though, and I see you're holding a pair of the Meta Ray-Ban glasses. These are AI glasses, right? You can ask them questions, they can give you answers or information or help you set...
And now you can see why Apple has tried to, hurt Meta over the years. And it's something I've been explaining for a long time. Meta is the company that is the most well-positioned in the world to actually disrupt Apple over the next 10, 20 years. The moment the iPhone is disrupted, right, is a very serious moment for Apple, right? And it's not coming this year, and it's not coming next year, or even in the next 5 years, but over the next 10, 20 years, high probability the smartphone is disrupted. And so Meta is the most well-positioned. And if we can have a device that is like a smartphone, but we don't have to get it out to see everything we want to see and record and all those sorts of things, that's going to be a very, very exciting day, right? And it's going to be a very disruptive day to the smartphone. And so that's a day that's coming. And now you can begin to understand why, because Apple all these tech companies know what everybody's working on, because these companies, their engineers go from team to team and executives go from team to team. So everybody really knows what's going on here. And so, I can tell you, Meta's the most well-positioned to disrupt Apple over the next 10, 20 years. And that's going to be an interesting fight to see how that plays out.
When will we see those augmented reality features maybe incorporated into something like this? I'm trying to understand what the business potential is here. Are you going to be selling this type of AR capability for $1,000, or will it eventually, in 2 years, be $300?
Yeah, so these things are doing pretty well right now in the market. You can buy them in just about any Ray-Ban store. You can talk to them. You can ask questions about what's happening in front of you. You can ask it to play music. You can make calls with it. They've been very popular.
You can't tell us how many you've sold.
We're not announcing that today, but we did announce a new model today. So we're starting to be available in more styles and ranges. These look good. They're comfortable. They're easy to use. We've worked hard to get latency down, which is how long does it take for the assistant to respond? Can you interrupt it? In order for these things to be natural, you want the voice interactions to be really, really close to the way you talk to somebody else, which means you respond immediately, you can interrupt each other, etc. So a lot of big advancements coming there as quickly as we can.
Chris, it's Morgan. It's great to have you on the show. I mean, one of the key messages or takeaways for me today from the Connect conference was the fact that AI is driving product value. And I wonder how you are thinking about that right now. If this is a situation where Meta goes it alone, or would you actually entertain the thought of integrating into another platform like, say, Apple Intelligence?
So the big announcement on the AI side for consumers today was Meta AI Voice. So you can now talk to Meta AI. It's got really good prosody, so it's very good at sort of a natural melody and a way of interacting with it. And as I mentioned before, the latency is really low. So starting today in the US, you can start talking to Meta AI and have a natural conversation in order to talk to it. We have open sourced Llama, which is our large language foundation model. So there are already, I think, over 400 million downloads of folks who are integrating it into all kinds of different interfaces, whether those be new types of devices, whether they are different cloud providers, et cetera. So we've been very open about our approach. I think that distinguishes us from others. And as I mentioned today, it means that our models get better faster.
Hey, Chris, it's John.
Yeah, and the llama opportunity, oh my gosh, that could end up being a AWS type opportunity for Meta over this next decade or two, which I don't think anybody's really even paying that close of attention to, in my personal opinion.
I'm most curious about...
People aren't paying nearly enough attention to what's going on with llama, AI, because you can see it in the way Meta stock's valued. It's valued at a forward P of what, 25, 27, something like that? If this was pricing in any of this stuff, Meta would be easily at a 35 or a 40 forward P right now, not a 25-ish. Come on, man.
Meta Quest 3S, which you announced today at $300, mixed reality, breakthrough price point. But my question is about the business model, because often if you've got one of these subsidized hardware situations, it's because if it's a gaming console, a company expects to make money on the software. Otherwise, it's kind of hard to scale, isn't it, without losing a whole lot of money if people want to buy, hundreds of thousands or even millions of these.
It's true. Good point.
So what we're seeing there is there's a huge now growing range of apps. So the same business model you see for a device category like a smartphone applies here, which is that we benefit when developers are using our systems. We also know that more developers means that the toolkit for building in mixed reality gets better faster. 100%. We see that eventually applying to AR. So everything we talked about today with Orion will accrue benefit from all the stuff that's happening today in VR. So in that way, for the long-term business model of the company, it behooves us to have a toolkit, an active developer ecosystem, lots of folks making refinements and improvements, and then development in each category, whether it's entertainment, whether it's fitness, whether it's gaming, whether it's utility. Productivity we showed off today, some of the work that you can do to make your headset into a workstation. So same business model will apply that you've seen in previous generations of hardware. And in the meantime, having an ecosystem building around it is going to be a big part of our long-term play.
Yeah, I always thought, my opinion on all this stuff is I always thought it was cool, or it would be cool, if you could, let's say, watch a sporting event. So you like football or basketball or whatever, and you could watch it with your friend, and your friend's not actually there, right? Because maybe your friend lives 30 minutes away, or your friend lives in another state or another city or whatever, but you guys could have an experience like you're watching the game together, talk very naturally, right? And it's not like you're on the phone or something like that, and it kind of seems like they're there even if they're not there, right? And I always thought that would be really cool, right? Imagine, you want to watch, basketball game with your dad, and you both are excited to watch this game, but, one lives in Europe, and the other one lives in the United States or something. What if you could have that experience like you're watching the game together, but not being together and those sorts of things, right? So there's so many potentials there, in my opinion, that are absolutely massive, and you could just kind of start running through example after example of why this tech is the future, in my opinion, and why it's going to be very big, and obviously Meta is very well positioned, which, as my biggest position in the public account, certainly it makes me a very happy shareholder. So, alrighty guys, appreciate you joining me as always. Thanks so much for being here. Once again, get that free workshop for you guys. This pinned comment down there, stocks to buy now for 2025. We got 3 trading days left in the quarter. So we're about to go in the 4th quarter. You better get ready to rock and roll for 2025. Pinned comment down there, free access. Much love and have a great day.